My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Next week is the most brutal stretch of earnings season. There'll be more important quarters, more conference calls, and more analyst action than even the most powerful supercomputer could ever keep track of. So let me make a suggestion after today's moves, where the Dow gained 228 points, S&P jumped 1.09%, and the Nasdaq pole vaulted 1.44%. Bye. As we head into the next 5 days of earnings, you need to think about what gets crushed. Sell. As much as what is working. Because this market's creating some unbelievable buying opportunities. See, in the heat of earnings season, Wall Street makes lots of mistakes. Just today, the market got not one, but two Dow Jones stocks dead wrong. Honeywell and American Express. Both companies reported numbers that were on the surface not strong. I'll give them that. But their future is much brighter than those numbers that were reported. And you got to buy stocks based on what's going to happen, not what has happened. So this isn't a history lesson here. For example, while Honeywell's aerospace business lagged this quarter, I am a huge believer in the idea that air travel's coming back. One of the old airlines are telling me that. Hence why we own both Honeywell and Boeing for my charitable trust, which you can follow along by joining the ActionAlertsPlus.com club. I also think entertainment will make a roaring comeback, which means the pullback in American Express, plain and simple buying opportunity. Remember the old tagline, American Express, can't leave home without it? Much more compelling now that the economy is reopening and you can actually leave home and go somewhere. The market just can't process all of these earnings reports. It's too hard. And that's why it makes so many mistakes. And it's going to make a lot of mistakes next week. So let's take a look at where they're going to be by checking out the game plan. All right, Monday night we get arguably the most important quarter of the week, and that is Tesla. A couple of years ago, Tesla's earnings reports were make or break. Lots of people thought the company would run out of cash and go under. Now, though, it's about whether Tesla can become the world's dominant automaker. Remember, these numbers impact more than just Tesla itself. There are dozens of electric vehicle SPACs, smaller stocks that need Tesla to succeed because it gives the whole group legitimacy. It's a halo. I like Tesla at these levels. I'm betting the quarter will be a good one. Tuesday's a nightmare. After the close, we get results from Alphabet, Microsoft, Starbucks, and AMD. It's like they're trying to give me a heart attack here. I mean, we've heard so much hype about Alphabet's search and YouTube divisions. All the wrong call. We got to focus on Google Cloud. I think it steals the show. I like it very much. Microsoft stock has run so much that it needs to report a monster quarter with huge Azure numbers. But, you know, the funny thing is, I think they'll probably do it. I say stay with it. I'm torn on Starbucks, though. The Chinese business should be very strong, but the U.S. is still transitioning to a new world where it's the only game in town. Why is that a problem? Simple. Starbucks has had a monster run over the past year in anticipation of the great reopening, and that call, well, it may be too early. I'm looking for a pullback. Then there's AMD, which has become a powerhouse in the data center. They're taking share from Intel, which reported last night and gave you a quarter that suggests that AMD might be in better shape than people thought, hence why it was one of the top 10 performers in the S&P today. I'm betting that Lisa Su, the implacable CEO, will tell a terrific story. And unlike so many other semiconductor names, her stock's actually down 10% for the year, meaning it could be ready to rock, down 10%. Now, Wednesday morning, we hear from one of the most controversial companies on earth, and it's Boeing. Now, it's bedeviled by execution issues. It's got a huge number of unsold planes. It just lost its operational CFO. Meanwhile, America's relationship with China, once a huge customer, has become, let's say, problematic. Yet if you're like me and you think we could be headed for an unprecedented economic boom, including the biggest travel onslaught in the history of this nation, then you want to own the company that's most levered to it, and that's Boeing. After the close, we have three companies that I think can report some blowouts. There's Apple, Ford Motor, and Facebook. Apple stock has been a laggard till recently. It's caught fire as we heard chatter about better cell phone sales and a major potential inroad into the enterprise. Thank you, Katie Huberty, for being the beacon this whole way on this. As for Ford, I anticipate excellent numbers despite the chip shortage. We can only dream of how much money they could make if, in a world where we had enough semiconductors to go around, and not just to China, by the way. Ford is worth buying. How about Facebook? Judging what we heard from Snap last night, wow. I think, gotta believe Facebook's going to knock it out of the park. Once again, it is not too late to be a buyer of Facebook, as I think it goes to all-time highs. As if that isn't enough, remember the Federal Reserve concludes its two-day meeting, and Chairman Jay Powell will be addressing the rampant inflation we have seen throughout so many supply chains in a host of industries. Does he still see it as transitory? If so, the beat goes on. Thursday belongs to Amazon. So we got to wonder, is it just a stay-at-home story? I mean, is that all it is? The stock's been treading water for months, precisely because people are worried about the year-over-year comparisons, okay? How can Amazon outshine its performance last year when everyone was stuck at home ordering from Amazon? I think the company has gained new adherents. You got to remember also, they're lapping some major hits to the bottom line. They spent a lot of money making sure the workers would be safe from COVID. I think the stock still works. Next up is Skyworks Solutions. The semiconductor names were on fire today, with the exception of Intel. Skyworks is one of the best in the group. Just last night, they bought an auto, industrial, consumer, and telco semiconductor business. I know that's a big mouthful, but that's what they bought from Silicon Labs. People don't seem to understand. They don't realize Skyworks has become a powerhouse thanks to this new division, coupled with its already amazing cell phone business. I predicted true blowout. We will hear from Lee Griffin later in the show. He's the CEO. But just about the deal, okay? Friday's oil day with both ExxonMobil and Chevron reporting in the morning. I think both companies will spend a considerable amount of time talking about how they're doing their best to cut carbon emissions. Hey, look, we now live in a world where even the oil companies have to care about the environment. That said, I also know that with crude back in the 60s, they can expand their budgets. Will they go on buying sprees, maybe boost their dividends? How about back to the buybacks? Or are they just going to conserve? When I listen to the oil people talk, I get the kind of positive vibe that I haven't heard in ages. With prices up and costs down, I think these two companies could surprise to the upside. I'm recommending Chevron and Pioneer Natural Resources caught a downgrade yesterday, good opportunity. Let's see what Chevron has to say. Finally, will the stay-at-home trade be really put to rest? It all comes down to Clorox and Colgate. Wall Street's circumspect about both of these. It's like they're getting no credit at all for the money they made in the last year, thanks to the pandemic, and they made a lot. The charts are all terrible. I can't say that the stocks will behave well when they report. Not when Kimberly-Clark got crushed in the wake of a disappointing quarter today. At best, these are battlefield stocks, and there's no reason to go near battlefield, not in this market. Bottom line, remember, there will be reports next week that are met with negativity, and not all of them will be genuinely bad, so I'm urging you to take advantage of that weakness. Look for buying opportunities. I'll help you. The stocks that get thrown away often don't deserve it, like Honeywell and American Express. So be ready to search for them. And then you can pounce. Zach in Rhode Island. Zach!
Jim, how are you? Booyah.
Booyah. I am good.
Happy
I hope
Friday.
you are. Let's go to work.
And shout out to Sater and all my buddies out in Vegas.
Love those guys.
I'm calling you about Raytheon.
Yes.
I've held it for a couple months now. It seems to be lagging a bit behind some other defense stocks, but it has had some really good news recently. It was awarded some notable Air Force contracts. It upgraded its sales and earnings projections. And I also think that it could be potentially a reopening play because of its commercial business. But it still hasn't recovered to its pre-COVID highs. So I'm just wondering what your thoughts are.
I happen to think that it's a great opportunity to buy. I also think that, like you, it's going to be a great reopening trade. I've been liking Honeywell, but I've always been partial. I like the merger, the Raytheon Technologies, and you are absolutely right. I think this stock can go back to 93, where it was pre-COVID. And a lot of those guys in Vegas. We love those guys. Let's go to Tucker in Colorado, please. Tucker.
Hey, Jim, it's Booyah from snowy Frisco, Colorado. I was late for the big jump last spring, but I'm still up about 23% on Twilio. Should I start looking for an exit?
No. I know Twilio is viewed as one of these companies that did really well during COVID, and therefore maybe it's time to quit. I think Twilio has changed the landscape. I think it is a terrific product. I think that every small business that reopens is going to want to use Twilio to look like a big business. You hold on to that stock. Mohammed in California. Mohammed.
Hey, Jim. I had a question about United Airlines. Just recently, they added 480-plus daily flights in the United States for June, and they expect the domestic June to be 60% of the schedule from 2019 pre-pandemic. The stock is still down over 40% from all-time highs, making it one of the few airlines that are still down. A lot of the experts are saying the sector is overvalued and overbought and will never be the same again. In your opinion, is this a smart buy for a reopening play?
I do like Southwest Air more, and one of the reasons that is because it's very hard to fly overseas. And you all have some big overseas markets. It's hard because they just make it very, very difficult. That said, I think you're right. It's not an expensive stock. I just happen to prefer another airline. All the airlines right now happen to be headed by very, very smart people. You're not going to go wrong with Delta or American or United, but I am partial to what Gary Kelly does at symbol LUV. All right, many of the stocks that will no doubt get thrown away, all right, next week after earnings, they don't deserve to be. Take advantage of the weakness and see if buying opportunities are created. I will work with you to find them. On Mad Money tonight, I'm sitting down with the CEO of American Electric Power after earnings. Find out how the largest coal-fired utility in the U.S. is working to transform itself into one of the largest renewable energy companies in the country and doing it right. Don't miss my exclusive. Then, last night, Skyworks announced a $3 billion deal to buy a chip unit from Silicon Labs. I'm going to sit down with the always bankable Liam Griffin to find out what it means for the stock. And how could Washington's infrastructure plans impact our largest steel company, Nucor? I'm going to sit down with the CEO after earnings. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.